Hey, hello everyone. Welcome to this webinar. Today we're talking about predictable retention, and we're going to dig deep into churn analysis and more importantly, how can you prevent churn? So great to have you joining us. I'm hosting this webinar. I'm Johan Nilsson. I'm founder and CEO of Start Deliver and Jekta AI. I'm also very involved in our academy, Impact Academy, where we do trainings for customer success managers and leaders. So that's a bit about me. And I have a guest here today, Niklas Kurki from Colcrane. And what I think is super interesting is that we have always been strong believers in having data-driven health metrics and being data-driven when you talk about customers and when you talk about retention specifically. And we teamed up here with Colcrane that comes from behavioral science and that side. And we've been doing some work together with some customers, and we wanted to share a little bit how you basically go from doing the right analysis to doing the right actions. And I think that's very relevant these days, and that's the main topic for today. So we're going to cover quite a lot. We'll share the recording for everyone who's joining live. For you who are on live here as well, feel free to post some questions. So we'll have some room in the end here to cover questions. So let us know anything you have on mind, basically. But with that, Niklas, welcome, and I'll hand over to you maybe to first introduce yourself and Colcrane.
Perfect. Thank you so much. Really happy to be here, and this topic is close to my heart. And yeah, Colcrane is all about working with first party customer data, and it's really well placed in Start Deliver. So really happy to build this collaboration. But basically, we drive profitable decisions from that data. We know that it's a lot of data and a lot of things are happening. Things change, product change, but we try to stay close to the data and what it says. Of course, we have to understand it in a way that is worked with our team and what we need. So basically, just briefly about myself. So I'm the founding partner and lead behavioral scientist at Colcrane. And I'm also a doctoral researcher within marketing and behavioral economics. So getting that side of things. I teach actually a course in strategic customer analytics at university level for master students. So really trying to build grassroots from that side of things. And I'm also, I have a bunch of applied researchers who I can pick their brain on. So really happy to get their perspectives. But really, Johan, what you alluded to, so what we have on the menu today are some Start Deliver customers, and they are eager to kind of dig deep into the data that exists in Start Deliver and really getting those kind of retention signals from that behavior. And then, of course, acting upon that and connecting back to Start Deliver and Jekta and really kind of, driving outcomes with that data. So we're going to give some perspectives on our work. And have a little bit of a discussion. Hope we will get some questions, and then right back to Start Deliver and Jekta, how that plays out.
Yeah.
So let's kind of go there. And first of all, you can look at data in many ways. It's storytelling, it's art and science. So you can do a lot with data. But what we see across kind of customers and settings is that there are a few things that interest many. So we call them lenses. So we have kind of 5 lenses that we normally look at. So the first one is just, okay, so how long do customers give our product a chance, before they decide to stay or not? So what is kind of what timeline can we work with? So that's one. And then what is kind of the global relationship between product usage and retention? We know kind of intuitively that it's important, but how does that actually look? And also kind of how early can we go? We talk about onboarding how early can we go to get those kind of retention signals? And here we talk about stabilization, basically. So when are not kind of it's fire in the hose and everything is calabalic, more kind of when things settles a bit. So that's interesting for us. Then of course, you talk a lot about product features and what kind of features are actually driving the usage, which is then connected to retention. And then kind of finally this is all interesting. We can measure the hell out of this, and we can just measure and analyze, but that doesn't help anyone if it doesn't drive value for the company. So what's actually some kind of economic opportunity that we can have to work with this kind of product usage and connect that back to retention. So we will be quite effectively go through these lenses, and then we have some questions around that.
Yeah.
So first, let's start with the first lens. So what kind of timeline do we have to work with? And then some indicator, you can look at this in many ways, but one indicator is basically the time to retention stabilization. Okay, so what does actually mean? Well, it means that our discussions are a bit different. It's not about is this the right fit, but we kind of evolve with the customer. So here's just kind of a basic survival model perspective on this. So basically, with every year that passes, how likely is the customer to be retained, or what is the churn risk? You can also take that perspective. So we often see is that we see a certain time period in the beginning. So for this particular customer, we have year 1 and year 2. Of course, the span can be a bit different depending on the company and how early stage they are and so forth. But after year 2, basically, we see this leveling off of the churn risk. So
something happens.
Something happens. We have kind of a tipping point. So things are stabilizing a bit. So basically, it's a kind of a purchase adoption cycle that we're seeing here on the more aggregate level.
Yeah.
So the takeaway basically here is for this particular data set that we had is that the earliest after second year, we can see some retention stabilization. Of course, we need to still make the calls. We still need to show up. But they have passed some kind of big leap.
Yeah.
At least. So
interesting.
That's one perspective that we often take. But of course, we are far from actionability here. We have some strategic where we are. So now we're going to go a bit closer. So let's take the second lens now. So let's talk about the relationship, product usage and retention. And here again, if I would have a colleague in a SaaS company, I would have discussions around, okay, so what's our usage retention relationship at the moment?
Right.
How has it evolved over time? We had this new feature. Has there been a material change in how it, or is it about the same? So this is what we oftentimes see in the data. Is of course, we have the churn risk on the y-axis, but then we have something that and that is we think is quite helpful is that we have active customers, quote unquote, customers, and they have some type of usage, right? They use our product.
Yeah.
Then we have those customers that have churned, and then when we look at how much less did they use product than those that are active or quote unquote retained.
Yeah.
So what we have here, we have below baseline usage levels. So we have about 100 to 60% below baseline average. Yeah. Then we are in a quite elevated risk territory of churn. But then we see again, it's levels off at certain points. So if we have usage that is about 60 to 40% below average usage, then it kind of levels off, and it's not so about do we get more usage or not. There are other things, and you can allude to them what those other things are. You have been discussing a lot, of course, with your audience and the academy what those other things are, but it's usage is not there.
So no, you're right. So and we're focused a lot on usage in this webinar because we can't cover everything, but I mean, usage have a very strong relationship to retention, as we will talk about. But of course, there's other things as well, like the relationship with the stakeholders of the company and the engagement of those, and of course, there's potentially other things as well, that you have issues if you have some issues with the product, or you have like other type of problems that will of course impact churn and retention as well. But super interesting. One thing on usage here, we talk a lot about like meaningful usage, because all usage is not created equal. So I think that's also interesting here to like how what's your thoughts there, and how to think about that.
Yeah, I think you're correct on that. That's a good observation, and we will touch upon that later. But I totally agree that like there might be some particular usage cases, and depends so much on your solution, is that this is a critical thing to just get switched on or switched off, or something like that, or those few kind of pressure points. So I think those like you need deeper understanding to, and you one point I always stress when you talk about data, there's always other stuff that we are missing here. So I think that's a crucial thing, and to find those and kind of incorporate them into analysis and kind of those alerts is crucial. But we will a little bit touch upon that, but I think spot on that.
And it was actually a question that came in now as well. How do you generate the baseline for product usage? And I think that's something to think about when you do, and especially when you look at average here. What is the average we're looking at, basically?
Exactly. So what we did at this level, still, we just took all events that were happening, and just so we have some global usage level. Basically, everything that a customer does with your product, from the start when they sign up to when they churn or something, and then just look at that. But as our viewers here, they are already kind of on top of things. We will dig a little bit deeper into those features.
Absolutely.
So, but good that someone is on their toes.
Of course.
So the point here is that we shouldn't draw too much out of this data yet. It's more like there is a clear connection, and we can show it in the data, but we are still on a quite high level, right?
Right.
So we need to get deeper.
Yeah.
So I suggest that we kind of get down to just where things start, and quite quickly, because we're quite high level. So let's talk about how early, because this is of course what everyone is about.
11. So you can't wait 11 years there, like the first graph.
No. It's just showing that what's actually the timeline where we are working. So we are in the business of 2 years, and then we have some strategy for everything that happens after that.
Right.
Crudely said, really crude. So let's really dig deep. And here again, what I would be discussing with my colleagues is, so what is our usage path to retention? What usage do we need? In our particular situation in the market, in the business that we are in, what do we need? What usage do we need to acquire? So here is another view that we oftentimes take, is that we have that, again, average monthly usage. It's some lever here, and then we have, and I would kind of focus my eyes here on the navy blue line,
right?
That's the quote unquote retained customers, and then we go down the lines. We see that we have those customers in the red line that churn in year 1.
Yeah,
those are those customers that really don't get going. And we see almost 2x of that usage. So that's kind of clear signal already really early on.
Yeah.
Something is not going right. And it's important here is after those 90 days, it quite goes off. So it doesn't happen. that much in this particular data. Of course, these are not universal laws.
No. This is a case. Yeah.
This is one of many cases.
Yeah.
How it could look like.
Exactly.
And then when we have those customers who churned in year 2 in the green, they're a bit better, but not that much.
No.
But then again, when we look at those customers who churned in year 3 or later in their tenure, we remember how the looked like.
Yeah.
You see a big leap, and we should expect that there should be a big leap. So takeaway here is that retention paths, they can show up quite early,
right?
At a certain specific time window, and it's oftentimes more early than the teams think.
Yeah, no, I think this resonates with my own experience as well, that you actually have these early signs. The problem is that you usually you wait, or you don't have the sense of urgency that early if it's a new customer, basically, and you see they're not adopting and they're not up and running after 3 months or 2 months or 2 weeks, depending on what type of product you have. You usually don't have enough sense of urgency, even though you can already see that things are not moving as they should. And then sense of urgency really goes up when it's time for renewal instead, right? So you should switch those around and focus earlier and have higher sense of urgency when things are tracking behind. And we basically know from this data, we would know that they will churn. I think that's a strong point here with this graph.
And something you also have been talking about is that if we can kind of get kind of the license to be escalate in the beginning, we can quicker kind of leave them. And okay, they will churn after first renewal. But we gave our effort in the right moment as early as possible.
Exactly. I think that's the major point here as well, because we don't have infinite resources, so we can't spend too much time on every customer most likely. So putting the effort earlier, I think you have a bigger chance probably maybe to make a difference. And then you can also see if they pick up in usage after 3 months or 3 weeks or whatever you have there. Then you will know that they will most likely jump up to the other group which will renew.
Exactly, and now we can at least measure that intervention.
Yeah.
So, we have talked about averages here, and I think we have some listeners talked about averages. So this is a bit of a busy graph, so let me kind of set it up for you. So what we like to do when we think about behavior is de-average it at least once or twice, because we can kind of drag out that behavior and see how does it actually look like a book, basically. What's going on here? So what we have here is that on the y-axis, we have the number of customers for this particular example. And then we have those same below baseline usage levels. And I think this is something I want to hear your point of view on. But this company, they have this kind of post-mortem survey.
Right.
These are all customers who churned.
Yeah.
So they ask basically, why did you churn in different ways?
Yeah.
And here the blue line is according to the company is preventable.
Right.
And the red is non-preventable, and the blue is unknown. So we didn't get the data.
Right.
So what I see here is that we have a lot of customers in the big bar who basically did not start using. They didn't.
Yeah.
They were not onboarded, basically.
Right.
Depending on how.
And the size of the bar is the number of customers that churn, basically.
Yes.
So you have the blue boxes. They would be quite a big part of your total churn. The under 90 to 100 and 80 to 90.
Yes, that's where they are. And then we have, of course, to the right, really to the right, in the distribution, we have those that actually didn't connect to usage that much, and those are a sizable chunk of customers as well.
Yeah.
As we discussed, it's not all about usage. It's not a simple bullet. But here again, I think the interesting part is the post-mortem survey.
Well, of course. Yeah. I was just going to say, no, because I think this is everybody listening and watching this most likely will be super keen to know. I mean, these blue boxes are the ones you want to target, of course. But maybe first on the red ones there, what could that be? Like non-preventable? What type of? Yeah.
Good question. So on the specifics, oftentimes, like I have seen a few of these post-mortems. I have not seen all of them, of course. There are many types of them.
Yeah.
But oftentimes, company gets acquired.
Right. Yeah.
It gets bankrupt. Something happens, or there is some large system change, which is not connected to kind of the stack that they were involved with.
Yeah.
So these are kind of popular, like often in what I've seen in this post-mortem.
Yeah. No,
I don't know, what's your experience?
No, but I agree. Like acquired, bankruptcy, that type of thing would be probably non-preventable. But of course, and also these post-mortems, it's quite a delicate thing to do, when to do them, and so on, to get the right answers, and you need to do them consistently as well. So, but I think it's very valuable, of course, to get this type of information and as you say, to dig a little bit deeper below the averages and understand. And also this will, of course, lead us into actionable things as well. What can we do here to avoid the blue ones here, at least?
And I think like one advice I would get, and we have been discussing this, Johan, a lot, is basically what to not do in postmortems. So one thing I would not do is ask about price.
Right, exactly. Yeah, that's a good point, I think, because it puts a spin on everything.
Yes. Because it's a lot of stuff that makes you feel it too expensive.
Right, exactly. You lead them that way by doing that.
Okay. All right. We will run through to. Did you have some questions?
We got a question here actually on this part. Is an international business change on the customer side something non-preventable?
Sorry, repeat that.
Is an international business change on the customer side something non-preventable? So I think that depends quite a lot. An international business change, what you mean there? I mean, one interpretation. Oh, internal. Okay. Internal business change. So a very normal, but I would say this is preventable change, is that there is a change of stakeholder, like the organization change, and you used to work with one person, and now you have a new one it's a new CEO or new CFO, CRO, whoever is your main decision maker stakeholder. That type of thing, I would say, is preventable, but it's sometimes missed and becomes a big issue later on. So I think unless some businesses change dramatically their type of business, and maybe your product becomes irrelevant, and maybe in that case it could be non-preventable. But I would say normal business changes within an organization are most likely preventable. But you need to be very much, when something happens, I would say it's a very highly sensitive thing for you from a retention perspective, basically.
Exactly. I think this is a really good discussion, and I think working up those post-mortem, you need to be robust about it. You need to stress test it, but the delicate thing is to be consistent when you land on something. So it's difficult from that point of view.
Yeah.
But let's move on to the product feature side.
Yeah.
And I think we kind of discussed this already. We had some takeaways. basically, I would say that the post-mortem is behavioral data. We can see the risk, but post-mortem, if you get it right, and
Yeah.
of course it's not easy. Where should we actually intervene? Where can we intervene? Helps a lot on actionability. So, but we have two lenses. So, lens for product features, and I touched upon on this meaningful usage already. But I would say, okay, so what's actually feature usage relationship? So what actually drives a usage? So what we oftentimes see is that a few features drives usage a lot. And of course, you can group your features in many different ways. Oftentimes it's the use case or something like that. And you can have different features around that use case and so forth. But you can have thousands or hundreds. But oftentimes it's very skewed. So here for this SaaS company was about 4 to 5 that were really meaningful usage drivers.
Yeah.
Of course, there might be in those that feature 10 there, that 1.2% is one super important switch on.
Right.
Who knows?
Yeah.
That would be something important to dig here, and we don't have it here today. But of course, let's take the gap view that we discussed.
Yeah.
Because of course, you should see in this feature, you should see that same gap, right? In that 90 days window, we see that we already have that gap, and some features have that gap is more pronounced. Let's say in feature 1 in this example, also feature 3. Of course, some features are used more. If you look at the y-axis, you have 1 0 more on feature 1, 2.
Yeah.
But they might be as critical to feature 3 and 4, depending on the workflow and how that looks like.
What you could watch out for here is, of course, if the red line, basically the ones that churn year 1 or 2, if they would have higher usage in some feature, but still churn, that could be like a vanity metric that you think you have good usage, but that feature is actually most likely not very much creating a lot of value for them, or very in service of what they're trying to achieve and the outcome they're looking for.
Exactly.
So that's why I think it's really important to break it down and understand this meaningful usage part and base it on features like you have here. And I mean, you can even do it further and look at specific segments of customers and trying to link it as good as possible to their outcomes and what they're trying to achieve. I think you will have even stronger correlation there.
Exactly. Normally we split this on the segment level or even on the customer level. You can go deep as well, of course. Like my metaphor is that my work is like being a diver a lot.
Yeah.
So you get kind of a certain amount of oxygen.
Yeah.
And then you go as deep as you can, but you know that you need to come up as well.
To breathe.
Exactly. And you can't show just a rock.
No.
You need to show something more like. So that's much about what oxygen we have and to work with, and that requires or talks about. And we can get oxygen as we go, as we start working with this. Then we get more business case. Okay, let's really dig in this, like super users or something like that.
Yeah.
So few product features often drive retention. We see this varies, of course, and you should see that gap in those important features like within days.
Yeah.
Sometimes. Okay, final lens. As I said, this is super interesting, at least I think, but it doesn't, like, it's not valuable if it doesn't move like business.
No.
So, like, we need some kind of business case to working with usage in a meaningful way.
Yeah.
Connected to, of course, some kind of North Star or something like this. But this is, for instance, one recent case. So this was based on a statistical model. So basically, we modeled that, okay, let's say we across the board uplift 20% usage.
Yeah.
20% uplift in usage. So that corresponds to about 1 to 3% retention.
Interesting.
And then, okay, so what does that mean it's roughly in CLV, like if you take it from a CLV point of view and then kind of translate that to ARR, about 20% increase in ARR.
Right. So that's really significant, right?
Yes, yes, I would say so. Yeah, I would say so. It's 1-to-1 in percentage points at least.
No, but I think this is super. I mean, and the point here is also to have the right. If you know this and you have done this analysis, you can also put your efforts, like and we'll come to that now. How do you do that? But
yes.
If you do the analysis and you see and you get these kind of you model it like this, then you can also say, okay, where should we focus to get there? And I guess these significantly below average customer segments, those are the ones to focus on to make the biggest effort for your work. And I think that's that type of insight you want, basically.
Exactly. So chipping off that below baseline usage, you can kind of try to distribute it.
Yeah.
Those that have been with us for 7 or 6 years, or those in. But we need some hypothesis that where should we? Okay, so how is our onboarding now? What are the kind of touch points between onboarding up until 3rd month or 60 days or whatever? So chipping off that below average usage has a business case. And then of course connecting to what start delivering Ejecta is that doing it at scale.
Yeah. No, but I think this is, I think it's super interesting. And of course, we could spend a lot more time, going through this. But having the analysis, I think, is step one. But then step two is like, okay, how do we make this actionable now? And how do we help the team? And that's, of course, where we come in and what we do more with our tools, basically. So I'll start sharing a little bit now, and making the analysis has many times. I mean, doing the analysis is not something new, and I think most of you listening have done this in some way. But what I think is really cool now, and what's really changing, is how fast you can actually use this analysis and implement it, and that's where I'm going to focus on now. So if we take a little bit what Niklas shared now, analyzing usage, if you look across your segments and if you look across the life cycle stages of your customers, and you do it on a feature level, it becomes quite a big thing to grasp. And if we take this case where you had like in this example, we had some clear indicators that customers that were not using key features in the onboarding and adoption phase, basically year 1, year 2 in this example, they were very much a high churn risk. They churned out year 2 basically, and that's where the drop was. So that's one of the findings you had there in the example. Another, we didn't talk about it too much today, but another thing that we see a lot is also looking at usage patterns to identify expansions. There's this other side of the coin, right? So you have risk in usage where usage is poor or usage is low, but you also have upside where you have strong adoption of the platform. So that's we didn't get into that today, but I would say it's as important to have good retention number is to also focus on where do we have expansion opportunities, of course. So, but this is just summarizing a little bit your discussion and your analysis there. But the challenge has always been, as you can see here, to have this matrix and to identify all these things. It's easy to get paralyzed a little bit about the analysis paralysis, right? So you have all these things and these findings, but what do I do with them? And I think this is, and we've been helping customers with this for a long period of time, trying to put math behind all these things and put metrics on all these things, and it becomes quite complicated. And this is where I think AI and using Ejecta AI, our AI, can change things and make it a lot more actionable, and you can actually implement the analysis very quickly. So I'll share a little bit about how you do that and how it can look like. And just to introduce what we do, so we have Start Deliver, our platform, but we have also our customer intelligence model called Jecta. And what we do is that we need data, of course. So we need this usage data, but we can also have other data points. And that's the input here. And then we have, we call it the intelligence layer, where it's basically where we have put in all our knowledge or all experience around what are risk signals, what are risk behaviors, also positive behaviors like expansion signals. So we have put a base layer with our customer success intelligence. But on top of that, you as a customer, you can make your own tuning. So if you have worked with Niklas here and you have identified these things specifically for your customer base, this first year, this segment, these features are critical, you can basically instruct the AI to look for those things. So instead of having to do this advanced math, you can just in natural language basically describe these are scenarios where our customers are highly at risk, basically. So that's what we call the tuning layer. So you have a foundation where we have the main things, but then you can fine tune things based on findings like we talked about earlier here. And then our model will basically from this as an output give you an assessment based on this, and also suggest actions. So I think this is like taking things very quickly from something an analysis into reality and into something the team can start working with. So this is a little bit theoretical, but just to show you also how it looks like. So this could be one of these customers that maybe have been not adopting very well in the beginning here. We talked about these like early customers that don't get up and running. Our AI will basically flag this customer as a red sign, basically. We have some mixed signals. We have basic adoption, inconsistent usage. So it will pick up on all these things that Niklas came up with in the analysis, basically. And it will tell you this customer here, new technologies, AB, they are at risk. We flag them as red here. And this will be also instructive. I'll come back to that. But so that's one example. Another example, of course, is the other way around. The other scenario here might be this is actually a customer that's been using feature 1, 2, and 3, but should now be most likely interested in using feature 5, 6, or 7. So you will also be able to instruct the AI to look for natural expansion signals. So using AI here, I think, gives you like a real outcome from the analysis that you can action on. I was showing like then you can drill down like one level lower, and I think this is also the power of AI, where you can turn data into understandable instructions, understandable description of how things are going. So when you drill down on this customer that's doing quite well here, you can see actually it will be describing the adoption pattern of this customer. They're using the features quite well, and so on. So you will have it also in natural language. So you can, as a human, you can read it and you can basically very quickly understand why would this customer potentially be ready to expand with us. So those are a few like more concrete examples. And we were looking at individual customers, but of course, with a big customer base, you always have to prioritize. You can't talk to all customers every day, so you need to focus on customers that have the biggest impact for your retention. At least if you want to impact your retention, that's what you need to do. So looking through all the customers, our AI will basically tell you these are the risks based on analysis. We have identified if these things happen, they are at risk. We want to intervene before month 3, not in the 12-month renewal, for instance. So here the AI will basically flag these customers as your priorities if you're the customer success manager looking after these customers. So I think prioritizing is such a key thing when we have limited resources, when we have limited time, and making the analysis is step 1. Step 2 is how do we action this, and priorities is such a key thing here. So that's getting help from the data. The next step is also doing actions. So I will not talk too much about this. We focused on the analysis and focused on how we can use that. But of course, with an agent, you can also get support in doing some of these actions. So you can focus maybe more your time on the most important parts, maybe being in calls, maybe being in front of the customer instead of doing everything around it. So making the analysis, getting the priorities, and then doing the actions. I think you can get a lot of leverage from AI, basically, with Jekta. What we have right now. So we'll end here with some questions. Feel free to chat or ask us live if you want. We will also share this recording, and both Niklas and myself will share our contacts, of course, if you want to have more questions or want to talk more or want to dig deeper into any of these topics. I think we've covered the most of the questions that we received here. We'll end here, and we'll share the recording with you, and we'll talk with you all offline at some stage. Thanks a lot, Niklas, for joining. Great session.
It was a pleasure.
And see you all.
Bye.
Bye.